Ever wondered what really happened to Britain's economy after Brexit? We were promised financial sovereignty, a global Britain ready to take on the world. But what if the opposite happened? What if, instead of taking back control, Brexit actually led to Britain losing its grip on its own financial destiny? Let's dive into the story behind the headlines. For decades, London was the undisputed financial capital of Europe. The city, a square mile of financial power, was the gateway for global firms to access the entire EU single market. This wasn't just about prestige, it was about trillions of euros in transactions, thousands of high-paying jobs, and a massive boost to the UK's tax revenue. Being inside the EU gave London a unique advantage, something called passporting rights. This meant a bank or financial firm based in London could operate across all 27 EU member states without needing separate approvals. It was the golden ticket of European finance. Then came June 23, 2016. The vote to leave the European Union sent shockwaves through the financial world. The promise was to break free from EU regulations and forge a new path, but what the financial sector heard was the sound of its golden ticket being torn up. The moment the UK left the single market, those automatic passporting rights vanished. Suddenly, London-based firms faced a massive wall of red tape to do business with their biggest and closest trading partner. The reaction was swift and predictable. Major banks and financial institutions couldn't risk being cut off from the European market. They began moving, not everything at once, but piece by piece. First, it was key personnel, then entire departments and billions, then trillions in assets. Cities like Paris, Frankfurt, Dublin, and Amsterdam rolled out the red carpet. They saw a once-in-a-generation opportunity to claim a piece of London's financial crown. We're talking about an estimated £1 trillion in assets moving from the UK to the EU and thousands of jobs following them. This wasn't just a business decision, it was a fundamental shift in Europe's financial geography. The consequences for the UK have been profound. The loss of financial services activity means less tax revenue for public services, like the NHS and schools. The pound sterling became more volatile, making imports more expensive and fueling inflation that we all feel in our daily lives. The UK's trade deficit widened, and foreign investment, once a given, became more hesitant. While the UK government has tried to pivot with concepts like Big Bang 2.0 to deregulate and attract new business, it's a tough sell. Why set up in London to serve the world when you can't easily serve the massive market right on your doorstep? The irony is stark. The campaign to take back control resulted in a situation where the UK's financial sector is now heavily influenced by decisions made in Brussels without having any say in them. To access the EU market, UK firms must align with EU rules, a situation often called being a rule taker, not a rule maker. So, has Britain truly lost financial control? The evidence suggests a significant erosion of the power and influence it once took for granted. The dream of a deregulated, freewheeling Singapore-on-Thames has clashed with the hard reality of geographical and economic gravity. The story of Brexit and the City of London is a powerful lesson in just how interconnected our modern world is. What do you think? Has the UK made the right call, or is this a chapter of economic self-harm? Let me know your thoughts in the comments below. Thanks for watching, and if you found this insightful, please like and subscribe for more deep dives into the stories that shape our world.